Welcome aboard the Runway, your destination for the latest updates in crypto, Web3, and tech. In today's episode, we've got a diverse lineup. We delve into the recent turmoil at major U.S. banks, including Bank of America, Wells Fargo, and Chase, where technical glitches led to deposit and transfer delays, leaving customers fuming. Bitcoin adoption soaring, and some interesting Bitcoin takes. Elon unveiling a new AI large language model called Grok, FTX eyeing a relaunch, and some global regulatory developments. It's Tuesday, November 7th. Let's take off. First up here, we have outrage as Bank of America, Chase, and Wells Fargo are still delayed after 3 days. Banking customers across the U.S. are still voicing their outrage due to expected deposit payments, paychecks, and transfers not arriving in their accounts. Last week, countless customers shared they had not been paid after a manual error disrupted the U.S. banking system. We've got some tweets here, people talking about what happened. What can be done to protect timely receipt of my direct deposit paycheck? Bank of America is not compliant with regulations and it's impacting Texas customers. Another person said here, LOL, your online bill pay system has been down for days and you're telling me to go there. Man, Bank of America really has no collective clue. Looking back at this article, it seems that somebody made a manual error affected, a lot of the major banks, and people couldn't get their money, they couldn't get their paychecks, they couldn't get their direct deposits, and this was all due to a human error. It seems absolutely insane in 2023 that we're dealing with these issues, that a human error can absolutely prevent direct deposits and people from getting their paychecks, and it kind of raises the question, is your money really actually yours? I found this interesting article about, does the money in your bank account really belong to you? Once you deposit money in a checking or savings account, that money technically is not really actually yours anymore. It looks like you essentially become a creditor to the bank, so they just have the agreement to pay you back if you ask for that money. We have something here called the right of set-off. It kind of talks about a guy who took out a risky loan, and the bank gave him the risky loan, and they arbitrarily decided to convert this into some 90-day note and just demand the money be paid back, and the customer basically didn't have the money in 90 days to pay back the line, the unsecured line, and the bank took the money right out of his checking or savings account to offset that. This customer tried to go to the court system, and they basically defended the right of the bank to essentially do what they did. Some interesting ideas that most people here in first world countries don't ever really have to think about on a daily basis. They just sort of assume that the money in their accounts is just theirs. But the question remains, is the money really yours? At what happened recently with the Canadian protests, where the government expanded their powers and sort of just told the banks to essentially cancel people, declared arbitrarily that they're terrorists, and the government sort of just seized this authoritarian power. From what I was hearing, some of these people that were participating in the trucker protests got zeroed out, meaning that they essentially didn't exist anymore. Imagine going to your checking or savings account and it just says this person doesn't exist, and the accounts have no balances and it's just zero. You're just zeroed out, because this is actually what happened to people in Canada. Kind of wild, right? Shows the importance of having something like Bitcoin and having that ultimate bearer control of an asset. Let's move on to our next story here with Cathie Wood likes Bitcoin as both deflationary and inflationary hedge. Wood would choose Bitcoin over gold hands down as an asset to hold for the next 10 years. Cathie Wood, founder of investment manager ARK Invest, said Bitcoin can serve as a hedge against deflation in addition to its potential in an inflationary environment. Appearing last week on Maren Somerset Webb's podcast for Bloomberg, Wood claimed there is no counterparty risk in Bitcoin thanks to its decentralization and visibility of all transactions on the network. She contrasted this to the opaque inner workings of the banking system. People don't really realize the counterparty risk of utilizing a bank, whether they don't like what you're saying and all of a sudden you become a terrorist, or they use government power to sort of cancel you out, or they're surveilling or looking at your transactions. If you look here in the U.S., violations of the Fourth Amendment. This is an interesting idea that, you can have this money and nobody can take it away from you. It's this ultimate sort of bearer asset. Let's go back to the article here. Switch back. You can only surmise because they're losing deposits and they have to fund those by selling securities, Wood said. The deposit flight has not stopped and they're forced to raise interest rates to compete against money market funds. Wood reminded of the regional bank crisis in the U.S. in March when a handful of lenders collapsed, helping to send Bitcoin's price higher by nearly 50%. Now you see it pumping up again, and you see the regional bank index in the U.S. breaking below where it was in March. Wood was echoing comments she made in May that the banking crisis, along with the collapse of crypto exchange FTX a year ago, had proved the concept of Bitcoin as they exposed the dangers of centralization in financial systems. And a lot of people conflate this whole idea like, what happened with FTX? I guess, crypto is done, or what? I can't believe crypto did that. It's just like any other institution, like any other sort of centralized financial company, whether it be a bank or it be, a crypto exchange. You're trusting a centralized entity. It's not the underlying asset. Like when Bernie Madoff, scammed people out of their dollars, it wasn't the dollar that failed. It was, it was the scam. It was the idea that, the platform that he was, this artificially fake platform he created to show, ridiculous investment returns. It wasn't the technology of having the dollar. It was the scam and the centralized nature of him holding all those funds that actually failed. This is just a common misconflation that people make, common FUD that's out there. BTC's reputation as a potential inflationary protection investment is in step with the crypto comparisons to digital gold. While Wood acknowledged that actual gold can also work as a hedge against both inflation and deflation, she maintained that Bitcoin would be her choice hands down if she had to choose an asset to hold for the next 10 years. Gold already has its demand. It's happened. Bitcoin is new. Institutions are barely involved, she said. Young people would much prefer to hold Bitcoin than to hold gold. Can't agree more with what she's saying here. Tom Lee at Fundstrat, I know he's spoken about this a lot, that the millennial generation and our generation are very comfortable with digital things, whether that be digital money or digital products or digital assets. We grew up utilizing these assets, whereas older generations may not have the same exposure to that, and this is a new, maybe unfamiliar thing to them. And Tom Lee talks about this, paired with the idea that over the next decade or so, the millennial generation is coming into their prime earning years. Expect a lot of that investment capital to flow into crypto, into Bitcoin, into Web3, into tech, because we're very comfortable with those types of investments, and we see the benefits in the real world use cases, and we're users of these systems on a daily basis. So it's another interesting thought, big picture power sort of play that's going to play out over the next decade or two. That sort of buy pressure that's going to be created just based off of sort of demographic shifts and demographic trends. Let's hop in and take a look at our next article here. Bitcoin mirrors high purchasing power. Wallets with more than 1K BTC hits record. The number of blockchain addresses holding at least $1,000 worth of Bitcoin has expanded to a record high of 8 million, according to data from Blockware Solutions and Glassnodes. These are not like huge like whale wallets. These are just the average individual getting a little bit more exposure to Bitcoin, sort of starting to learn and see the value proposition here, right? And there's so many factors involved in this, but you're starting to see more wallets, more fundamental underlying bullish things for the network itself. Let's move on to our next story. Elon Musk launches AI chatbot Grok, says it can outperform ChatGPT. This is a little bit misleading. It can outperform certain levels of the model, but not the highest model. Let's go right to his tweet itself here. And he posted on Twitter here, just released Grok. And if we click on this link, it'll sort of take you to a little bit more information about Grok. Let's see if I can pull this over so we can see it a little bit better. Grok is an AI model modeled after the Hitchhiker's Guide to the Galaxy, so intended to answer almost anything and even suggest what questions to ask. I know that's one of Elon's favorites, the Hitchhiker's Guide to the Galaxy. Grok is designed to answer questions with a bit of wit and has a rebellious streak, so please don't use it if you hate humor. A unique and fundamental advantage of Grok is that it has real-time knowledge of the world via the X platform. It will also answer spicy questions that are rejected by most other AI systems. Grok is still a very early beta product, the best we could do with 2 months of training, so expect it to improve rapidly with each passing week with your help. Why we are building Grok. Here they talked about helping humanity on its quest for understanding and knowledge, empowering research and innovation. This AI will be a little bit more spicy. It'll answer things. I think what Elon has done at Twitter is just great for humanity, sort of, reducing a lot of the censorship and the bias and the propaganda that's going into the current, it's very clear to see in the current generation of open AI's, or should we call them closed AI's products, with GPT-4. I think there's been many examples of just absolute and pure bias that was, obviously put in there by humans. One example is like, that I hear often, I think I heard, Rogan and Elon discussing this the other day on their podcast was like, if you ask GPT-4 to write a nice poem about Donald Trump, it won't do it. But if you ask it to write a nice poem about, say Joe Biden, it will. I mean, that's just unbelievable, bias that has sort of been being baked into these tools, and possibly to the detriment of humanity, censoring and just the propaganda. So it is important that there's competition in this space. It's important that, we have a choice and options for people to essentially, pick and use what models they want to use. And I think it's nice to see Grok join the party here. If we go back to the article itself, we can sort of see Grok 1, our frontier LLM, and it kind of talks about, the parameters it used, and it kind of compares it to other models like Llama 270B and GPT 3.5, and then we see Grok here sort of outperforming those sort of models with a lot less parameters. And it's not quite there yet. It's not quite on the level of Palm 2, Claude 2, and GPT-4, but, we kind of see it, basically definitely for a first iteration getting itself in the game. So they also did another little test of Grok 1 here where they used a Hungarian national high school finals in mathematics, and they didn't really do any pre-training or anything specifically on that, and it looks like it actually outperformed Claude 2 on this one and was performed a little bit worse than GPT-4. So I think this is a nice start, and a nice starting model to launch that they're already competitive right out the gate. And I assume that Grok 2 and later generations will possibly catch up to some of these other models without all of the censorship and propaganda and bias that's sort of baked into those tools. Engineering at XAI, they talk a little bit more about kind of the engineering behind all this and the research behind all this, and definitely a nice easy read. I read through it all. It took about 5 minutes to read through this stuff here regarding Grok. I love that. I think that's perfect. If you go to OpenAI's website, it's just like it will take 3 hours to read through all this, but I think they did a good job of just making this very easy to understand and readable for the average individual. All right, let's move on here to our next story. FTX relaunch effort includes Celsius winner proof group, sources say. Silicon Valley investment firm Proof Group, part of the Fahrenheit consortium that successfully bid for bankrupt cryptocurrency lender Celsius, is in the running to relaunch FTX, according to two people familiar with the plans. FTX, at the time one of the largest crypto exchanges, collapsed almost a year ago, sending shockwaves through the industry. Since then, the bankrupt exchange has received multiple bids for a potential restart, now narrowed down to the short list of 3, according to Perella Weinberg Partners, an investment bank involved in the process. I think this is an absolutely horrible idea to try to relaunch FTX. I think the name brand damage and the fraud that occurred by Sam Bankman-Fried, that what he committed and was probably one of the largest frauds and using customer funds since maybe Bernie Madoff. So I think that relaunching the FTX brand would be just a terrible decision. Hopefully, if somebody was to buy this asset and relaunch, it would be a completely different name and just kind of start from scratch. Maybe just utilize some of the connections and assets that they have and customer lists, etc., to offer something completely different and total rebranding. So, or potentially just sell off those customer lists to companies like Coinbase or other crypto firms that have been operating ethically and in good standing. Let's move on here. Next up, how the crypto industry responded to the IRS proposed broker rule. Some people are concerned about privacy, some about data. This article is written by Nicolesh Day, such as we have just passed the first deadline for comments on the IRS proposal to classify certain types of crypto entities as brokers for tax reporting purposes. There's going to be a public hearing later today and tomorrow discussing these comments, although the actual comment deadline has been extended by a few weeks. We're coming up on a comment deadline for the IRS's proposed rule for enforcing broker reporting requirements on certain types of crypto entities and transactions. Why it matters: the U.S. Treasury Department and IRS are poised to bring fresh crypto tax reporting rules into effect. The crypto industry largely seems opposed. The majority of comments I read urged caution or raised concerns about the proposal as written, while only a relative few seem to support it. A lot of people have written, in the comments, and it seems like largely negative feedback about this. Essentially makes all transactions that need to be sort of reported and collected. All sorts of entities that really aren't brokers will be classified as brokers. A lot of these entities are going to be required to collect personal information on users, and a lot of them have no capacity to even do that. They are essentially DAOs or DeFi protocols that have shared sort of ownership in a way that doesn't make this plausible or reasonable or even possible. I think for new things, there should be laws that make sense and regulations that make sense for those products, right? We don't treat a gas station like a bank, and we don't treat a Walmart like a spa and pool company, right? Everything is sort of needs to have, thoughtful rules, regulations, and legislations around it. You can't just throw everything in the same bucket. And, I don't know who would want or think that's a good idea for, anonymous DeFi protocols to be collecting users' information and data. I think that's a terrible idea to even, require that. It just seems like a giant honeypot of private data that will, of course, be exploited like most of these honeypots are as time goes on. Let's look at our next story here. Custodia Bank, a crypto-friendly bank, announced that it has officially launched its Bitcoin custody platform to customers in select U.S. states. On November 7th, Custodia Bank, formerly known as Avanti Financial Group, announced on X that they have now launched a dedicated platform to cater to Bitcoin custody services aimed at businesses such as fiduciaries, investment advisors, fund managers, and corporate treasurers. Founded in 2020 by Caitlin Long, a former managing director at Morgan Stanley, Custodia Bank is based in Cheyenne, Wyoming, with a mission to facilitate digital assets integration with U.S. dollar payment system and provide digital asset custodial services. I think this is really cool, really great for the industry. Caitlin Long is a great operator in this space. She's highly knowledgeable, extremely smart, has always called out a lot of things that have happened before they've happened. She's shown tons of light on a lot of issues that have been occurring. She's a great advocate and a great operator in our ecosystem. So I think this is great for the space, especially if we come back here and look at some of these other brokers and trust units that have just these custodians that have basically terribly failed. For example, Prime Trust and Fortress Trust are just an example of that. And I think something cool here that Caitlin and Custodia have is that they are going to be segregating each individual user's assets, which I think is sorely needed. Each customer will have their own separated, custody. The platform offers segregated custody accounts through its custom-built Bitcoin custody platform, combining Bitcoin custody with U.S. dollar services in a single, user-friendly platform with the aim of simplifying operations and minimizing risks. Do not have all your eggs in one basket, and that's really the way that custody should work, especially with large clients. Taiwan is working on a bill that may lead to the recognition of Bitcoin as legal tender. The country is bolstering its footprint in the crypto ecosystem, as shown in a recent IOTA collaboration. So it looks like they're working with a blockchain called IOTA. Taiwan has officially announced its intention to recognize Bitcoin as legal tender. This bold move, the first of its kind in Asia, is set to have a profound impact on the global crypto market and is bound to spark conversations about the future of digital currencies in the region. A lot of other countries are really taking the lead when it comes to crypto and Web3. The U.S. is sort of falling behind on this front. Other countries that are taking the initiative here and stepping into a leadership role. Hopefully the U.S. will wake up soon, and we can get some people in power that can help create more jobs and more prosperity and help our industry. Guys, it's been great. Thanks for listening. Stay safe, stay blessed, never stop learning, and keep an open mind. Hope you all have a wonderful week.